Did you know that from 1906 the Dow Jones is at 100 points? Move it forward to 1933. Did you know that the Dow Jones falls back to the same milestone of 100? This is like leaving your money in the stock market for 27 years and nothing grows. Some might ask, what is the Dow Jones? The Dow Jones is a basket of the 30 biggest companies in the United States market. The general sentiment is if we track these 30 biggest companies in the United States, we can somewhat tell how the overall economy is doing. However, after all, in 2020 with trillions of dollars are being pumped into the market to respirate the economy, it is fair for us to conclude that tracking the Dow Jones and comparing it with the overall economy is a discourse in the current era. Mr. Phil Town suggests that sometimes leaving our capital in the market for too long might not be the best solution, taking from the history of the Dow Jones given earlier. So what do the average investors like us do? There are a few strategies in Mr. Phil Town's book Number 1 Rule worth knowing if we want to pick our own stocks to buy. Mr. Town's 4 M's. Does the company have 1. Meaning? In other words, can this business feed your family 100 years from now? 2. Does this company have any moat around it? Basically, any protection from their competitors? Please check out the 7 Secrets to Investing like Warren Buffett for more details on moats. 3. Management. Do they have a lot of skin in the game? Or are they just working to suck the company dry? A good way to see this is from the SEC filing in the 10K, under management compensation. Some of these managements are paid very well and handsomely to stir the ship to nowhere and, even sometimes straight into the iceberg. Look out for this type of management. 4. Margin of safety. Are you buying this company with a price safety behind it? As Mr. Warren Buffett mentioned, on the margin of safety, which means, don't try and drive a 9,800-pound truck over a bridge that says it's, capacity, 10,000 pounds. But go down the road a little bit and find one that says, capacity, 15,000 pounds.
Before we move on to Mr. Phil Town's Big 5, if you can kindly click likes and subscribe, this will really help us to survive and really help us with the YouTube algorithm. Thank you so much in advance for your kindness. You're awesome.
Mr. Town's Big 5. Very important to note, can this business survive with inflation? If this business cannot keep up with inflation, then inflation will eat this business to death. Please remember this before you buy any company. 1. ROIC, return of invested capital. Is this number over 10%? 2. Sale growth rate. Is their sale even growing or standing still? 3. Earning per share growth rate. 4. Equity book value per share growth rate. 5. Free cash flow growth rate. Please note all these Big 5's growth rates must meet the minimum threshold of 10% or over is a good long-term investment according to Mr. Phil Town. Please also remember consistency is always the key. If the number is not consistent, this could mean the management is not doing well in steering the company on the right path. There are 2 ways, according to Mr. Phil Town, when to sell a stock. The best way is to never have to sell any company we own, but if we do have to, then follow these 2 fundamentals. 1. The company no longer has any moat to protect it from the competition. For example, a patent that allows this company to thrive and exclusive rights to make a particular product have just expired, leaving others to march their ways in. 2. The company is trading way above the sticker price. You can visit Mr. Phil Town's to get the sticker price and other cool calculators at Rule 1 Investing.com or valuesnip.com for free intrinsic value automatic calculators. Overall, rule number 2 suggests that when the stock is trading at an overprice than its intrinsic value, then we should consider selling it now and buy it back when it is no longer overpriced. In order to do this, have the company on your watch list and set an alarm when the company falls below a certain price. But please make sure you review the company fundamentals first to see if nothing major has changed before buying it back. Which one of the rules did you like the most? And which one are you going to use? Don't be shy to leave a comment below. Thank you so much for making it this far. Please join our newsletters. We promise no spam, only to update you when new summaries are available. We swear by the moon and the stars in the sky. We hope to see you in the next summary.